So good afternoon, this is Roel, and welcome to today's info session on how to remain ahead of the financial curve with focus on cost controlling and cash management functions of SAP. During these difficult economic times, many companies have been bleeding cash by incurring expenses such as salaries to employees without incoming revenues to cover these costs. In other words, many business enterprises are currently in different levels of being cash strapped and at risk of being financially unstable. In this kind of situation, it may be wise to devise plans and implement measures that could help mitigate the continuing effect of this financial difficulty. Maybe one thing that would make sense is to revisit and revise plans or budget that was originally set up way before this crisis. It may pertain to departmental budget for OPEX or any internal projects or activities. And then imperatively impose stringent measures to make sure that everyone will stick to the budget. So this is where we suggest the use of budget checking functionality in SAP. Financial stability doesn't stop with being able to control your spending. In this instance, you must also make sure that you have enough funds to comply with your financial obligations. And to be able to do this, you must have visibility of your company's liquidity. For this, recommend the use of cash management reports in SAP. Having mentioned these recommendations will bring us to the objectives of today's info session. Namely, learn how internal order management can help in cost controlling and monitoring, and see how cash management monitors cash position and provides liquidity forecasts. So for today's topics, we'll be tackling cost controlling through internal order management. So we'll give you an overview of what is an internal order, and then the uses of internal order, and the standard reports available in the system. Then for cash management, we'll give you an overview of what are the cash management reports in SAP, and the purpose of Memo Record as a planning tool. And then we'll navigate through the different screens or display in the standard reports. So first, what is an internal order? An internal order is a cost object in CO module used to plan, collect, and settles for activities like marketing campaigns or any other internal projects, activities, or events. For the sake of those that are not familiar with SAP, CO is a controlling module, is an accounting module in SAP that deals with transactions related to P&L accounts. So these are revenue and cost and expenses. Just like a cost center, being a cost collector or a cost bucket. So an internal order is able to accumulate costs being charged to it. So it's more specific to activity. So unlike with cost center, which tackles the whole departmental cost, an internal order is used to monitor specific activity or events, just like marketing ads, marketing campaigns, marketing research, trainings, like that. This SAP system enables you to monitor your internal orders throughout their entire life cycle, from initial creation through planning, budgeting, and posting of all actual costs. So just like a cost center, it has its own master data with a corresponding code that should be inputted during document entry. So if you are going to post an expense that you are going to charge to an internal order, then during accounting entry, you must be able to input that particular code. So it may be inputted manually or through automatic derivation, like when you are posting an invoice based on a purchase order where it was originally indicated. And then you can create plans and allocate budget to an internal order. And then in terms of monitoring with the status or the transactions, there are available standard reports that you can generate from the system. So there's the first use that we want to highlight about using the internal order management. So being a cost collector, you can use this for cost monitoring. So it provides additional dimension for the purpose of cost tracking. For example, it may be used to provide cost monitoring report on specific activity performed by a cost center. So just like in this example that you are seeing now on your screen, so we have marketing as a cost center. So every time that you post an expense or a transaction to a cost center, it goes to the cost center report. But using the internal order, if you have several activities or projects or events within that cost center and you want to be able to specifically track per event in terms of the expenses, then you can create an internal order for that. So in our example, we have marketing, and then the activities under marketing is, for example, marketing ads and marketing research. So there is specific internal order created for that, so that during document entry, um, aside from entering the cost center for marketing, you also have to indicate the internal order for specific activity. So in this way, you can slice and dice the cost of the whole department by being able to generate individual internal order reports. So you have cost center report for the whole department, and then you have internal order report for activity or event transactions. And then, by the way, during document entry, you can default the cost center from the internal order. So for user convenience, you don't have to input both internal order and cost center. So you can default the cost center in the internal order master data, and then during document entry, you just have to input the internal order, and automatically it will get the cost center assigned to that internal order. Actually, this is the highlight of the use of internal order in terms of budget availability check. So for you to be able to control your cost, you can set up budget. So especially now that we are in this crisis, and then so it would be wise to review or revisit the budget that we have allocated to our activities before, and then set up a new budget. And then for you to be able to control that, we can implement measures like this one, the budget availability check, using internal order, so that we can ensure that no one will exceed or go beyond the budget. So first you can set up the original budget, and then you also have to configure the tolerance limit. Tolerance limit is just like a configuration that you set in the system when you indicate up to how much, and then what will be the reaction or what will be the system monitoring involved during the transaction. So it could be a warning or it could be an error message. Just to mention, budget checking actually happens during document entry, but it can also happen during creation of purchase requisition or purchase order. So if you indicate in your purchase order that you use internal order, and in times during creation of that purchase order, there will be budget checking process that will take place. So if ever, whenever there's if you go beyond the tolerance limit or threshold that you have set up, then a specific warning or error message will pop up. So just to give you a specific example of how the budget availability check process happened. So for example, you have a marketing ads, and then for this year, based on your review, you want to allocate just 20,000 budget for expenses for that particular marketing ads. So first you set up the budget, and then of course you must have your tolerance limit. So in this example, we have 70% tolerance limit and 100% tolerance limit. So for 70%, what we have configured is that it will be a warning. So whenever the cost charged to that internal order reach or go beyond 70%, the system will issue a warning message. And if it goes beyond 100%, it will be an error. Okay. So this is how it looks like during document entry. So for example, just so we have the 20,000 budget for this internal order, the marketing ads, and during document entry, a posting of an expense amounting to 15,000 was made. So in this case, 15,000 is exceeding the 70% tolerance limit that we have set. So the system will issue this type of message, a warning that says a budget is almost exhausted. So a warning is like this is like a facility or the function in the system that gives a heads up to the persons responsible for that internal order for that activity of how much the status of the budget consumption for that activity. Okay. So if it goes beyond 100%, just like in this example, so I have posted at, amounting to 21,000 of expenses. So this is beyond the 20,000 budget that we have set for this internal order. So in this time, when you try to post the transaction, the system will issue an error message. Whenever you encounter an error message, the transaction will not proceed. So you will not be able to actually post the transaction. And as I have said a while ago, um, internal order for internal order management, there are standard reports that are available that you can generate for you to be able to track the expenses or the status in terms of budget consumption of your internal order. So in this example, we have a budget of 20,000 and you have an actual posting amounting to 15,000. So it will result on available budget of 5,000. So the commitment column here refers to transactions that are not yet actually in accounting. No accounting entry yet is made for that particular transaction. So this happens for transactions that are in purchase requisition or purchase order, still in purchase order status. So these are the commitment items. So for the assigned columns, is actually equal to the amount of actual plus the commitment amounts. So you have your budget, and then you have budget minus assigned is equal to the available quantity. Okay. So that actually is the whole business process related to cost controlling via internal order management. So now we come to another to the next portion of our info session, which is about liquidity. So cash management is the liquidity gives is the function in SAP that gives information about the cash flow and liquidity of your company. So it's used to monitor cash flows and ensure that you have sufficient liquidity to cover your payment obligations. So it gets data from accounting entry, from the the financial module, as well as the other module in SAP, which are sales, for sales order information, and purchasing, or the materials management for the information regarding purchase requisition or purchase order. So the cash flow that being mentioned here are in terms of incoming and outgoing transactions of your bank accounts. So based on posted data, bank transaction must have been recorded first in the system for it to appear in the report. So if you have if you have bank transactions, usually you have your bank statement. You have to make sure that the transactions in your bank statement must be in the system first for it to be able to appear in the cash management report. So either you have your manual bank reconciliation or you have your electronic bank statement wherein you just upload the transaction of your bank accounts to the system. And then for liquidity purposes, it gets data not only in FI, but also in sales or in sales distribution, as I mentioned before, and then materials management for purchasing transactions. So I just have to emphasize that for the information or for the transaction to appear in the report, it must be reported first in the system. So these are the two standard reports being provided by the cash management function in SAP. So we have the cash position and liquidity forecast. Cash position supplies information on the current financial situation in your bank accounts and bank clearing accounts. So as I said a while ago, these are the bank statement transactions. So you have your book transactions and you have your bank statement transactions. For it to be able to appear in the report, both of the transactions must be recorded first in the system. So just to if there are anyone who is not familiar with the clearing accounts, so you have your cash and bank. Your cash and bank account has a specific GL account in the system. And what are these bank clearing accounts? Just to give you an example, in SAP, when you post a transaction for payment to suppliers, by issuing a check, you do not credit the CIB right away or the cash and bank right away. As technically, by just issuing it, it doesn't mean that your cash and bank balance is already credited in the bank. So what we do in SAP is we use the clearing accounts or suspense accounts. Like for example, outstanding checks or deposit in transit. And when the bank statement comes confirming the encashment of that check, for example, so that's the time that you credit your cash and bank with the outstanding check or any other clearing accounts as an offsetting entry. So the same concept applies to collection or deposit transactions. And then on the other hand, we have the liquidity forecast. It provides information regarding expected collection or payments. Okay, so just to emphasize, this is not yet the amount that you have collected. These are the invoices that you have posted to the customer or vendors. These are the open items or the collectible or the payable line items from your business partner. Okay, so as to data source, cash position gets data from GL accounts or cash and bank or cash clearing accounts I have mentioned before, and then for Memo Record. So later on, I will discuss what is this Memo Record is all about. While for liquidity forecast, the data is actually generated from your SL postings. So it comes, as I said, this is the open or the unpaid customer or vendor line items. And at the same time, you also have the information coming from sales order in terms of the receivable or the future receivable, and then it also gets data from the purchase order in terms of the future payable. So these two, sales order and purchase order, have no corresponding accounting entry yet. So they're in the other modules, but they are already being captured by the report in terms of forecasting. Now for the relevant date, so we have for cash position, the date being used here is the value date. So why value date? Why not the posting date? Because there are instances that you create a transaction, like for example for post dated check. So you should for the post dated check, the date that you indicate there is a future date. So at this time, instead of using the posting date, the report capture the date in the value date, which is actually the date of the check. While for the liquidity forecast, the relevant dates there are due date and payment habit. So due date, this is based on your payment terms. So this is when the invoices are due for collection or due for payment. And then there's an algorithm in the program that it gets data on the payment habit of the customer or vendor. So for example, if that vendor usually pays 3 days after the due date, then it's being considered by the program. Okay, but still you have the option of just using the due date not including the payment habit. Okay. So just to emphasize again, cash position basically pertains to posted cash transactions, while liquidity forecasts are posted customer or vendor invoices still up for collection or payment. Now, if you will combine the data coming from these two reports, this actually amount to the total liquidity of the company. Okay, so I have mentioned before that aside from the posted transaction, either from accounting or from sales order or from purchase order, you can also create another source of data that you can use as a plan tool for the reports. So both for cash position and liquidity forecast. So Memo Record, that's the term Memo Record, is a planning tool for cash management. Any future outgoing or incoming payments that are not yet in SAP via actual postings, either in FI or other modules, STNMM, but you want to see in the reports. So this is both available for both cash position and liquidity forecast reports. So an example for this is, for example, you are anticipating an incoming receipt of a bank loan. So it's so it's being a future activity or future receipt. It's not yet in the system, but you want to see it how your liquidity balances will look like if you will include that particular transaction. So this is the use of the memo record. So in this case, you can create a memo record for that incoming loan and include it in the display of the cash position or the liquidity forecast. So it's a planning tool. Now we come to the report granularity of the cash position. So with drill down function in SAP, you will have several levels of information that you'll be able to display in the report. So initial display of the report. So later on, I will show you how the report looks like. Just to give you an idea how you're able to drill down in terms of granularity of the report. So on the initial generation of the report, you will see the balances of the transaction summarized in terms of currency. So the currency here that we are talking about is the transaction currency. So it can be your local currency, or it can be under any other foreign currency. And then if you drill down further, it will give you the display about the nature of account. The nature of account is a summarization according to the type of GL account. So as I've said, I've mentioned before, for cash position, the source are GL accounts, which can be cash in bank or clearing accounts. So this is where we classify in terms of the nature of account, if it's a cash in bank or a clearing account. And then if you drill down further, it will give you the display about the planning level. So planning level is an additional grouping of your GL accounts. So you can group your accounts, for example, according to banks, or if for example, if you're a group of companies, then you can also group your bank GL accounts according to companies. So it's flexible. It's up to you on how to design in terms of the grouping of accounts. And then the last level will show you the individual GL accounts itself. So this is the last level for the cash position. And now just to give you an idea how the report, first for the cash position, looks like. So as I mentioned before, the initial display of the report is based on currency. So if you have different, if you transact in different currencies, then the report will be able to summarize that per currency. And then you have the option to display the report daily, like in the first picture. So you will be able to see the balances on day-to-day balances. Or you may opt to display monthly. So like in the second picture. And actually, there's another available option to view the report weekly. I just don't have the screenshot for that, but it's also possible to view the report weekly. Sorry. And if you drill down further, now it will show you the report according to the nature of account. So we're still in cash position. So the nature of account, it's either cash in bank or cash clearing. So like in this example, you have your cash as the cash in bank, then you have your outstanding checks. So these are the checks that you have issued but not yet encashed in the bank by your vendor. And then we have just an example. We also have the transfer out, because there are companies that usually pays not by check but through fund transfer. So you also have a different clearing account for that. Fund transfer, meaning instead of issuing a check, it will be the bank that will just transfer the fund from your bank account to your vendor's bank account. And then we have the uncleared deposit. So in terms of the collection, so usually when you collect the cash or check in your head office, and then you create a deposit transaction for that. So while it's in transit for deposit, you can already you may just first post the transaction to a clearing account instead of debiting it to the cash in bank. And then when your bank statement comes in confirming that there's a deposit to your bank account, then that's the time that you will debit your cash in bank and you credit this clearing account, the uncleared deposit. So if you drill down further, now you will go to the planning level display of the report. So as I've mentioned, planning level is an additional grouping. So it can be, it may pertain to a certain bank account. So for example, if you have several bank accounts in Metro Bank or Security Bank, for that matter, then you can create this grouping. So a planning level is assigned in the GL account of your cash and cash clearing accounts. This time, the planning level actually also serves as identifier if the data is from FI posting or from Memo Record. So as I mentioned before, if you have plans, for example, of uh, including an anticipated bank loan in the report, then you can create a Memo Record for that. So during this display, the per level display, you may be able to identify which ones are actual postings, meaning the actual accounting entry, or just a planning data through the Memo Record. So this is the last level for the cost position, that in terms of drilling down the information for granularity. So now we come to the account display. So for this specific display, you'll be able to see the specific GL accounts or the cash clearing accounts. So every account, every GL account refers to a bank account. Okay, so now we're finished with cash position. So we'll proceed to the liquidity forecast. So again, in terms of granularity, for liquidity forecast, this is how it looks. It will look like. So the same with cost position, the initial screen or the initial display of the report is summarized according to currency, the transaction currency. And then the next level is the nature of account. For the nature of account is the summarization according to that type of transaction, if it's an incoming, meaning incoming collection, or an outgoing that pertains to payment to your suppliers. And then the next level of the report are the planning level. Okay. So the same with this is the same concept with the cash position. And then for the cash management group, so this additional grouping of your customer and vendor, this is actually very essential in the cash management in the report. I will discuss further about this in the succeeding slides. And then if you drill down further after the cash management group, you'll be able to see the specific customer or vendor accounts. And then the last level is you will be able to see the source document. So if it's a posted customer invoice, then you will be able to see the FI document for that particular invoice. Or if it's just a sales order or a purchase order, then you will also be able to view the source sales order or the source purchase order for that particular transaction. So this is the initial display of the report for the liquidity forecasts. As I said, this is summarized according to your transaction currency. So in this example, we have PHP and any other foreign currencies that you use for your transactions. And in our example, I have generated a report with the daily columns. So a day-to-day balance. And then if you drill down further after the initial screen display, now it will show you the summarization according to the nature, which is if it's a receivable or if it's a payable. So in this particular example, inflow refers to your collectibles, or these are the posted customer invoices, and then the outflow refers to the posted vendor invoices. So the day-to-day balance display here. So in this example, like for example, for the first column, the April 24 column, it shows an amount amounting to 8 million. So it means that on that particular date, you have a collectible by that amount. And then for the outflow naman, for example, for April 26 column, it displays that on that date, you have a due date that you should be able to pay to your vendor amounting to 35,000. So as I said, these are a forecast. So these are not yet the detail or the transactions that you have like collected or paid. So this is for collection and for payment.
Ruel, excuse. Somebody just notified that the audio is gone. It's actually one experience, although I can from my end.
Sir, ano yun? Hindi ko nakuha.
Somebody reported that the audio is gone.
Hindi siya hindi naririnig?
Does everyone share the same experience?
I'm able to hear the presenter, so I'm not
Oh,
sure
yeah.
it's for
Thank you.
everyone.
Okay. Yeah. All right. All right. Larry, I hope we'll send you a recording, Larry, if ever your audio is not yet working up to now. We'll be sending recorded version of this webinar to you and to everyone also. Yeah, please proceed, Ruel.
Okay. Okay, so we're done with the first or the initial the second display, summarization display for the liquidity forecast. Now we go to another. So if you drill down further after the nature of accounts, which are inflow or outflow, the report will show you the the level, which is actually says it, from where is the source of the data. So if it's coming from FI or ST or MM. So for inflow, the usual source of data are FI and SD. So for FI, these are the posted invoices or receivable with corresponding accounting entry, while for those from coming from SD sources, these are at the level of sales order. So there's no actual invoice yet, but that in terms of forecasting, the report is already able to capture that so that it will be considered in your decision making, maybe that you have an incoming invoice for this particular order, although um, it's not yet delivered. And for the outflow, so this is the data coming from FI or MM or purchasing. So this is for FI. These are the actually posted vendor invoices. So with corresponding accounting entry. While if the data is coming from purchase order, so this is just the created purchase order. So it's like anticipating that you will be incurring an invoice for this particular purchase order later on, or based on the reports, it will be shown. Just to mention, for those that are not coming from FI, for actual FI data, which is based on due date, for sales order and purchase order, the date that being considered by the report actually is based on the planned delivery date. So for FI, the relevant date is based on due date plus the payment habit. While if the data is coming from sales for the sales order and MM for the purchase order, the relevant date being considered by the report is the planned delivery date. And then as you further drill down on the report, so this is the cash management group. I mentioned this before. It's now I'll further give you information about the use of cash management group. So this is additional classification for your customer and vendor. So it may be a grouping based on payment terms, payment method, or location of your vendor or customer. So this is actually flexible. This is up to you on how you will design the grouping of your vendor or customer in terms of your cash management reporting. And this particular group is assigned in the vendor master data or customer master data. Okay. So this is very essential because if you are not able to assign a cash management group to your vendor or customer, a particular customer or vendor, that customer or vendor will not appear in the report. Okay, so this is the link of the customer or vendor transactions to this report. So if that vendor or customer has no assignment in terms of cash management group, then you will not be able to see the transaction of that customer vendor in the report. So as I said, there are standard grouping delivered by SAP, but then you can create or we can design specific grouping that you want to use in terms of cash management. But another thing to remember is that you can only assign one group to a customer or vendor. Okay, so you cannot assign multiple group. So it's a one is to one relationship. Okay, so this is the last level of the liquidity forecast. If you drill down further from the cash management group level, then you will be able to see the specific line item of that customer. And if you double click or drill down further on that line item, then the system will be able to display the document itself, the source document itself. So if it's an FI invoice, then you will be able to see the accounting entry in terms of the accounts receivable. So for SAP, for those familiar with SAP, so this is the accounting document. The first entry there refers to the accounts receivable, the first line item. So you have your receivable and then you have your revenue accounts. Now, if the source data is coming from the sales order, if you drill down further, then it will be able to show you the source sales order, or if it's a vendor line item that is from a purchase order data, then it will also show you the purchase order. So for this presentation, I was just able to show the sales order. So I was not able to show you the purchase order, but it's the same concept. Okay, so as I have discussed earlier, we have the two standard reports for cash management, the cash position and the liquidity forecast. And then I individually presented to you the different screens from the two reports. But actually, there's an option for you to generate the report at the same time. So like in this screen, you can show the overall picture or the overall balances from cash position and liquidity forecast at the same time. So that what you will see at the bottom line, this is actually the amount, how much you are liquid. The last line here, the yellow line here, amounts to the liquidity, to the total liquidity of the company. So you have your cash and you have your possible collection and possible payment. Okay, so as a standard report, you'll be able to display or extract the report to Excel. So this is how it looks like when you extract or display the report using Excel. So what you see in SAP screen, it will also be replicated in a Excel presentation. Okay, so that's actually that ends my presentation about all the functionality. And then just for a recap of the benefits of the functionality that I have just discussed. So using this functionality, it will somehow give us the ability to ensure that we'll have financial stability and liquidity. So for financial stability in times of economic difficulty, you have to make sure you are not spending over your capacity to earn and you are able to pay your essential expenses. An effective way to do it is by defining budget, having facility to analyze cost, making sure no one is overspending, and being able to know when and how much fund you have to be able to make payments. So these are the three elements that will assist you or help you to attain financial stability. You must have cost monitoring, you must be able to control your expenses by budget checking, and you must have visibility on your liquidity. So for this particular function, the SAP can give you timely information. Actually, this is real time. So if whenever you post a transaction for the cash management reports, as long as the transactions are posted completely in the system, then you can have a real time visibility or timely information in terms of your cash management.